Alright, just getting myself set here while people trickle in. Anybody wanting to check out my screen, I also shared YouTube Live where I'm actually sharing my screen for anybody to see. Pull out. Okay, so let me start pulling up some data. We had this really incredible rally this morning. We were ready for it in many ways because the data was, let me just try to pull out here. So basically for the past few weeks, which was the weirdest thing, is like, it was a little concerning at one point that we had the data showing that institutions like the big guys, not retail or anything like that, but lots of orders coming in with almost like a FOMO look to it for upside, right? Especially, and that intensified a lot more on Monday and sometime last week. I can't remember exactly the date, but just continual loading, like just people accumulating on spot. Now, that's what causes that spring load. And how we're seeing is that basically the volume was, like you guys can see here, whoever's watching the stream, was bearish, mostly puts all day, but then the call AV was mostly positive. So saying that, you know, whoever's buying those, whoever's buying those calls is willing to pay top-notch dollar, basically like saying, like, huge conviction day after day that was happening. And it just, yesterday all day the same thing was happening. Every time we had a dip, we saw that same dynamic happening. So this is a huge risk though, because even though we're having this rally that we're getting today, that could have happened the other way around, where, let's say, some extremely bad news, some new catalyst, something crazy happens where now it catches the whole market off guard, and the whole accumulation that was happening for institutions, now they're caught without being properly hashed, and that's usually the recipe for a flash crash, right? We didn't get it. Everything was kind of really priced in. We were talking about how the tariffs liberation day was a sell the rumors, buy the news kind of event. So here we are, $10 higher from our open today. We were able to identify the support on SPY fairly easy today, because let me see if I can find it. Yeah, it's still there. Look at this. I'm gonna pull out the whole gamma profile. So the next 5 expirations gamma profile. So if you can see it on, if you go on the live, the link that I shared, you can actually see my screen. We saw it this morning. It looked basically like this. Where's the X? No, not this one. Let me pull out. Well, it changed a lot by now, but I'm gonna try to help you guys out to see it. So all the gamma concentration that we had was basically at 555, right? We had some concentration, like we still have it. If you look at the yellow area, I'm gonna share this and post this on social media as well. So all this concentration, the yellow was there already this morning, but there was a ton of gamma stacked up at 55. And what happens is that, think of it like a little trampoline or a safety net. When you have that much gamma at 55, it's just like every time it tries to go lower, there's a mechanical buying pressure that happens. What I mean by mechanical buying pressure? It means that market makers should hedge and stay neutral. And remember, market makers are they're not directional. They're just trying to make money by selling you options. So by doing that, every time they sell you a call, they are holding a call that is short on the books, and to hedge for that call, they have to buy shares or futures or whatever if it's SPY, right? So that's the mechanical buying pressure that I mentioned, is that every time they sell calls to market participants, they are holding a short call, a call that was sold in the books, and then the mechanical buying pressure is like, okay, when it reaches to 555 on SPY, I need to buy, because if it goes lower or if it goes higher, I can have some issues in my books. So we identify those things by using gamma, which is I'm trying to make it like super simple how I explain this, but like that's basically what I mean by mechanical buying pressure so often. Now we okay, what now, right? So now we have this gamma profile that I just shared with you guys on Spaces and here as well. So I'm just gonna do a really like walkthrough real quick of what to expect, and then I'm gonna go over my notes, kind of give you a little bit of like a market prep kind of mindset for the rest of the day. But right now, usually gamma tries to fluctuate or it gravitates towards the highest concentrations of gamma, right? So you see a few different colors on that profile. You see a purple color, you see a blue color, a yellow, a orange looking beige, and a white, right? So the purple is today's inspiration. That is the most dynamic, the most influential at this point. As today approaches 3 o'clock and so on, then we're gonna see a little bit of the blue area start taking over. Okay, so one thing we notice is that right now we have a pretty even distribution between the positive gamma, the little purple star above price, and the little purple star below price, right? Those are the peaks of gamma, where gamma is the greatest. And gamma, if it's a magnet, it pulls price towards where it's greatest, right? And right now it's kind of even. So price is smack dab between the two, right, at 565, because the top at 568, the bottom is at 560, a little lower actually. But it has this like little two-way action, tug-of-war kind of feel to it. The one cool thing though is that, as you can see, the other inspirations have a lot of gamma at 565, which will provide a little bit of support. Nothing too crazy, but this is exact price action we want to see happening to try to tag 570, right? So right now, we're seeing like this buying pressure coming in at 565, 564. We want to see these like higher lows forming, okay? And then what could happen is that this little breakout above 566 would be a major accomplishment by the bulls. As you can see, there's a little peak of gamma at 566. Every time you see a little spike like that, especially on the today's inspiration, on the 0DC inspiration, that is resistance. If it is below price, that's going to be support, right? Right now it's being resistance. So a breakout out of that, you know what happens? it makes the market makers have to hedge in a way that's going to drag price all the way to 568, right? So that's a $2 momentum trade that anybody could catch. But what else we're seeing? So this is the most likely setup into close is going to be just this magnetism happening towards 568, maybe 567. Something greater would have to happen to make that price not tag those levels. What I mean by something greater, some of the other Greeks that we track here would have to overcome. And again, I'm going, if you can see my screen on the YouTube link that I shared, but I will keep posting this stuff online as well. Let me just take a couple screenshots here and then just send it to X so people can see it. And I'm just gonna go over SPY really quickly as I'm pulling up this. So if you can see, early this morning, right, shortly after I posted a market analysis, I was saying that we were gonna attack 570, possibly 575. I didn't expect 570 to attack today. I'm not expecting 570 to attack today. I was more expecting 568, to be honest with you, after we clear 565. But it's kind of bullish. Again, something greater would have to show up. Some kind of change in data would have to happen for this to be thrown off, right? The only thing I can think of right now would be a complete loss of 560, and then this gamma at 550 would kick in, pulling price lower again, right? And then we're gonna have to battle 555 again, and then 550. But as is right now, all the people that have shorted SPY for I don't know how long now is going to have to pay the price for it. Where they were shorting a lot at 555, especially this morning, right? We can even see a little bit of that right here, right at open. There was a lot of short interest coming, and especially here at 560 as well. A lot of people shorted SPY. So let me go to this bottom room here and try to pull out the gamma for SPY. And I'll pull out what was it, Vanna for SPY as well. Okay, so this right here is what happens when you type plus gamma, and then whatever ticket you want. Could be SPY, could be GME, could be Hood, could be Palantir, could be Tesla. You get the next three expirations on this little picture. You get this little cool chart right here that shows you a little bit of support and resistance. So now, as you can see, 560 is becoming support, where before it was resistance. It turned green, and then now we have the price target on next resistance at 568, right? And then we have a little bit of information that goes on. It tells us how much this strike costs, 83 cents. The other strike costs $1.40, $1.04. But the cool thing that I really look for is this volume right here, right? Because this is like aggregate volume, showing me how much of this volume is puts, how much this volume is calls. And then the one thing that I always like to trade with is this implied volatility. Whenever we have, this is a Greek called Vanna, right? Is the change of delta in respect to volatility. We have this really cool profile that shows, again, those stars in the chart always show resistance support, right? So right now Vanna is showing resistance at 570. But the most important thing for me right now is this black box on the top left, right? It's showing this positive Vanna at 43%, while negative Vanna is at 57. So when combining all this stuff, there's way more negative Vanna than positive Vanna, right? At every single strike. Now, through backtesting and historical data, we found out that whenever that is the case, we try to trade with the implied volatility, right? So basically what it causes is that when implied volatility is a little higher, in this case it is, it causes some nice pops and some decent rallies. They're a little bit unstable and they whipsaw a lot. It makes you feel like the market makes it trying to take out your stops and whatnot. But with the implied volatility being greater than on the call side rather than the put side, it makes so the pops are going to be more violent to the upside, right? So with that in mind, and then looking at delta, let me pull out delta as well. So we go over all this, and we look at VIX, we look at some other stuff. We see that, first of all, right, we were talking about this 565 level. It's a major level. 568 is the resistance, and then we have 560 and 562 as well as support, right? So we put all that through, and we try to get some price action, and we love when people use Fibonacci's and RSI or whatever makes your boat float. So basically what I got was this little analysis, which I'm thinking that, you know, buy pullbacks into 563, 564. That's the area I'm thinking that, you know, we could have a more decent bounce. You know, set my stops below 62. So technically I could average down from 64 to 63 all the way to 62 if I want to. And then the target would be 570. It should say 568 to... Oh, I said 568 in another chat. That's why I didn't put it here. Okay. 568, 570, and 540, and 574, which would be like later on in the week if, again, momentum continues, 560 does not break. That is the path of least resistance, right? Now, why is that? Let me pull up this chart right here. You see how many people, so negative delta represents people that are positioned for price to go lower, right? So all these people who are positioned for price to go lower have, it's a cut here all the way at 550 still, right? So what is happening as time passes and we stay above 550? All this positioning below 560 is depreciating, and as it depreciates, market makes need to hedge in a way that they're covering some short positions, right? And as they're covering some short positions, it bids the price higher, right? So this is kind of what we're looking for. We had some other trades as well that we're talking about. I posted something on Hood today. You can read it. I can actually let me share this online. So this was my analysis on Hood. Where is it? Space. You can, if you look at the nest, you can see little analysis on Hood. I mean, I can go over PLTR volunteer for a second. That's another trade we're in. We got in at 79. I took profits already on most of my stuff because 90 was my price target. But as you can see, it's still very much like when we traded, right? So you see all this safety net gamma that I talked about early in the space call. This was just like this, right? So price tried to go below it, and buying pressure increased. The mechanical buying pressure started increasing, and then there was a bigger spike here at 79 that provided extra support, and then we had this 85 level, which was a breakout. And then this was the greatest, the $90 strike was the greatest gamma all along, right? So we knew that, okay, we have our entry at 80, 79, that area, and then we had our price target, which was 85, 88. Why 88? Because this little, if you were looking through YouTube, you can see my screen, this little spike in gamma right here, 88, and then you had also that huge concentration or gamma at 90, and that's what made me want to take this trade, right? Because I wanted to capture that move all the way to 90. I'm going to share this street spaces as well in case some people are not in YouTube and somebody cannot see it. So I just shared the gamma for Palantir as well. So this trade is kind of done for me. I mean, here's the deal, right? I'm going to approach this trade as a complete second trade. That is, if it starts beating above 90, then I'm going to go long again because it's likely to trade 100 once more. Right, so this is kind of what we're just gonna wait for and see what happens. But as of now, I'm happy with it. Below 85, I'm cutting my runners. I'm good. That's one trade that we were in. if anybody is long Palantir, just watch out for this 90, 88, 90 level. It could really provide some real pressure, and this is why I keep talking. Let's go GME, because GME is going to be a good example of that. Right, GME. So basically, what GME looked like was that 30, when it rejected above 30, at 30, there was none of that we see in Palantir, right? There was all this game above Palantir, above 90 on Palantir, all that stuff was gone. There was not of there. It was just everything at 90, right? So that's why I was like, it kind of looks bullish from 24, but at 30, I'm cautious, right? So basically, you see how it looks right now on GME? Let me post this as well. And I posted earlier, but let's do it one more time. All right, posting, sharing with spaces. Okay, so you see how 25 is now all the stars. Like, we try to make it super simple. A nebula, we just say follow the stars, and that's the reason why. Because at 30, that's what it looked like. All the stars right there. There was a little less stuff than there is right now at 26 or 28. There was that 32, back then. But kind of 25 is a major ceiling right now. And then the reason why I keep saying about 23, if you've been following the posts that I have, is because the peak positive is at 23. So see this big old star right here, right? That thing is going to be major resistance. Now I'm getting my support from 22, from these two other stars right here, right? Again, we make it super simple, just follow the stars. Now, I am optimistic, and that's something I posted yesterday about GME, is that there is some activity at 25 that makes me think that we could trade up to 24, 25 by next week, right? And here's the reason why. Again, this is not financial advice, nothing I say. Don't go bet in the house or any of that. Do your own DD, please. But here we go. So what I'm doing right now, I just typed next GME. What I'm doing is that I'm isolating this blue area, right? So let's get rid of this inspiration is a play is going to play out for most of the week. Once Friday comes along, then this blue area is going to start taking over when it comes to forces. And what we see here is that, again, if we just follow the stars, right? We have 22 as support, and then 25 as a major gamma level that could really attract price, right? So 23 is still major because you see how much positive gamma and negative gamma is the same level. So when you add them up, it's quite a lot, right? We still have some gamma right here, 24, so little by little, but 25 is the greatest. So as long as this level right here, this 25 level, is increasing positive. So what I mean by increasing positive, so right now it's at 600. If tomorrow goes to 800, 1,000, 5,000, whatever it is, like the more it grows in exposure, the more likely it is that price is going to gravitate towards the level. Now, on the flip side, if that level tomorrow goes from 600 to 500, 400, 300, you know what's going to happen? Even though 22 is support, because this is decreasing, it's going to break. And it's likely to go back to, let's check. We have some support at 21, 20, and whatnot. There's some other maths I can do to calculate more precise, not just even numbers. That's something we talk about here every now and then, but yeah, that's what's going on. Oh, look at this. We trace all the way back to 23. Alright, so VIX rejecting at 21, 22, and then SPY bidding right here, 563, could give us a pretty good entry long into the end of the day, where we can technically recover all the way back to 65 at least. Yeah. And again, my stop, so basically my stop would be at 562, below 62, then I'm looking to cut my entry. That looks interesting. Alright, so going back to GME. Let me go over this stuff. And then you see, right, how bullish the volume is, number one. 77% of the volume is bullish. And then the implied volatility is extremely skewed towards calls, right? But now, Here's the issue, right? And here's the reason why 23 is likely to hold, and it is major resistance. You see how Vanna is mostly positive? When we have this mostly positive Vanna with this much call IV, it makes it so resistance becomes way stronger. So what happens is that every time price reaches here, market makers are forced. It's not a choice. It's not like, oh, I want to keep the price down. They're forced to sell shares, right? And they account for anywhere from 70 to 80% of the volume to any given stock, depending on how liquid they are, of course. So those are estimates. So every time it comes here, and they need to sell, right? Just based because that's how the dynamics happen. That's how there's that's 63 and 563 entry expiry was excellent. I have the low right now since I posted it. Let me pull up. Why can't I have the low right now? There you go. The low with that candle was 21. Alright. So every time you reach can you hear me? Let me see. Sorry. So every time it goes to 23, because the implied volatility is so much higher, as you can see, that resistance becomes stronger and stronger and stronger. And then if it tries to rally above 23, something needs to happen for it to accept above. Otherwise, it's just going to keep selling off, right? It's unfortunate. It's just the mechanics of the market. It's just how they are able to make a liquid market happen, something that people are able to trade, right? But so far, that's what we're looking for. It's 23 to hold, and data to change, and it looks like it's going to change next week to allow for a move above 23. Okay, let me just type something real quick for the crew here. Okay, let me try to see if there's any ticker requests or anything like that. I don't think there is. Oh, so Intel has above 22 can go so much higher. So that's something I was talking about a little bit earlier with the crew here. Intel can go. Let me show you. I just saw somebody mention that they're trading Intel. You see, Intel could go 25 easily. It's just a matter of holding above 22. That's number one task. Then you have some breakout at 23. About 23 should turn 24 and a half. Let's call it maybe. Pull up some of my fruits. 24 and a half. What I got? Yeah, 24 and a half, 25. That's really what I got. So above 23 breakout, 24 and a half, and so on. Okay. Well, this is a little bit of what happens behind the scenes here. Again, I keep updating this analysis. The pullback so far is a play. It won't trigger, it won't be invalid until 562. We still have the 568 target on deck, but so far so good. We did a today's price action was everything we expected and more, right? So let's just keep pushing a little higher. Let me check this real quick. These are like automated bots that post data every minute. and you can just look at how people that they trade in scalp use them all the time. They're pretty cool. So basically, again, just follow the stars, right? So just whatever star is below price, that's your entry. Whatever star below price, that's your price target, kind of deal. And so yeah, and definitely a little bit of pullback here, kind of consolidating around this area. It's nothing bad. We're just gonna look for those high lows and then shoot for 567, 568 in a day. As long as everything holds, no reason to change that mindset. Let's see. Yeah, look, there's nothing. Really too crazy here. We can also use the dashboard that we have, point control. So basically, if you like technical analysis, you can just go over here. It gives a pretty quick summary: 6 bullish, 6 bearish, 2 neutral, and then you can go over the bearish ones because it's below the SMA, 20 SMA, the 50 SMA. The 200 SMA, below those SMAs, EMAs, but the RSI is still bullish. MACD is still bullish. Bollinger Bands, what's going on here? Oh, it's a Bollinger Band. It's at 564 right here, so okay. Makes a little bit of sense. Stochastic, still bullish. Oh, look at that. Yeah, so, and then, I mean, Squeakham's pulled out here, something I was going to look at. So you see how there's all these indicators and all these like charts and whatnot, and then we developed this little guy called Genesis, which kind of interprets for us, and basically all we need to do is type Genesis, and then whatever ticker you want, let's say GME, ELTR, right, and then it gives you a little forecast, but that's what I want to say. So basically, I agree with this 100% neutral to slightly bullish, which is basically what we're seeing. It's more of like a consolidation phase right now for SPY. GME is saying bullish with potential volatility. Palantir bullish with potential volatility, same thing. And then you give it some price targets, which I gave you already. A little more detail down below. And then it's just saying this huge range, oh my gosh. 560, 568. Yeah, as long as 560 holds, that's a pretty big deal, to be honest with you. Momentum continues above 562 though. So, and then what else? Let's see. And yeah, a lot of bullish for potential volatilities, which makes total sense just because of the market how it is. Alright. That's basically it, guys. I'm gonna cut off today. I'll be covering more and more tickers, and again, whenever I do a live like this, feel free to tag me on like a ticker you want to check it out. And I usually can't do it while I'm online and I'm live. But again, I'm shooting off today. This should be recorded on the Nabla Trades YouTube channel. So we post these every now and then there. Make sure to check it out. And again, thank you for everything. Appreciate you guys. Take it easy. Bye bye.